Hello. Please meet today's guest, Chris Markowski.
You want to invest like you're already wealthy, like a multi-billionaire. They don't freak out when markets go haywire. They take advantage of the situation. It was one of JP Morgan's great quotes of all time. He said during, bear markets or recessions, stocks return to their rightful owners, meaning that me. Okay, I'm going to take advantage of the situation. And unfortunately, too many people don't realize that. But that's probably without a doubt, the most rewarding part of our business is watching people grow their business, watching them grow their wealth. I don't even like to call what we do. I don't like the phrase financial planning at all. To me, it's financial preparation.
What happens when you take someone who spent decades on Wall Street, give them a moral compass, and let them loose on the startup world? You get Chris Markowski, a guy who walked away from the big money machine because he couldn't stomach selling garbage to people who trusted him. For nearly 40 years, Chris has been building his own investment firm, hosting a radio show that reaches 250,000 people, and watching both sides of the money game, the people trying to build wealth and the system that's often working against them. Today, he's going to tell us why the current startup environment feels like navigating a constantly changing minefield, why those obscene private equity valuations should scare you, and what it really takes to build something that lasts when everyone around you is looking for shortcuts. If you're thinking about starting a company or you're already in the thick of it, Chris has some hard truths about what it takes to survive when the rules keep changing. This is one you won't want to miss. And hello, Chris.
Good
Glad
afternoon.
to have you on the show.
Oh, pleasure. Thank you for having me.
Yeah, thank you. I always like to start with a very simple question, basic context setting, which is where are you originally from and where do you live now?
Oh, I am from upstate New York. Like most of the people in the country think it's like that New Yorker magazine where it's kind of like just the island of Manhattan and then everything else. But no, I'm from way upstate New York, grew up right outside of Albany.
Oh, so you spent a lot of time in the Adirondacks, I assume.
Yeah, again, I love to fish. I have to say my least favorite form of fishing that my father used to take us on was ice fishing, and I had to endure that up at Lake Champlain and some of those places. But yes, did spend some time up there without a doubt. Lake George and Saratoga, wonderful places up there.
So we've been like 5 times to a beautiful cabin up on a huge rock overlooking Lake Osita in the little tiny town of Flower.
I have not been there. Not been
And
there.
it's
What is that near?
it's really close to Saranac Lake.
Okay.
It's that general area. It's like
Okay. I
the
know exactly where
town
that
we
is.
really go to
Mhm.
like get things is the town of Saranac Lake.
Okay.
We
Yeah, a
just
lot
love
of
it
nice
up there.
places up there. Down towards the end of Lake Champlain, Westport. It's nice, especially in the summertime. It's gorgeous.
It's a gigantic park. I mean, it's the largest state park in the country by far.
Oh yeah. And again, if you can endure, like I said, sometimes you go up there going skiing, it's a whole nother level of difficulty. Vermont and Adirondack skiing. You ski there, you can ski anywhere. They say, you can make it anywhere. In New York, I mean, if you could ski up there, you could ski anywhere. You've dealt with, skiing on glaciers, on ice the whole time.
I skied at Whiteface, which is the mountain at Lake Placid. I skied there when it was about 5 below zero.
The wind chill's probably 20 below,
Not-
30 at 5.
My brother and I decided we had to just go out because we were only there for a short weekend, and we had trouble opening the doors of the car because they'd frozen shut on us while we were driving. And then there was nobody on the mountain because it was solid block of ice and we started to see white patches on each other's faces as we came down. So that was the frostbite kicking in. So we ended it with one run. We went back and our wives said, "We told you were idiots."
Don't feel bad. I took a big hit to my ego. At Killington, the same thing happened. I'm like, okay, we thought that there was all this fresh powder, but it was fresh powder on ice. I ended up walking down the hill. I'm out. I'm done. I don't got to kill myself. I'm too old for this. And I walked down.
Chris, you've had this company that you founded, and it's got a very hard name to remember. It's Markowski Investments. You founded it 40 years ago. Is it like Are you at your anniversary? Is it really that?
It's under 40, a little under 40 years. We're getting closer. My radio show is an anniversary. My radio show I've had for 25 years, my programs. So that, that's what's been going on for that kind of put us on the map. But when I started this, with my brother, it was just basically kind of, we just didn't like the culture on Wall Street. We saw a niche that needed to be filled, and we kind of hit the ground and kind of ran with it at that point in time. I left New York City, actually went back up to Albany, New York to save money and to get the whole thing going. And then, we moved on from there, growing it little by little. And again, we're still, thank God, God willing, continuing to grow like gangbusters.
In other words, you were working on Wall Street. You had some experience with what it was like.
Yep.
And that's what's enabled you to sort of compare and contrast that for people. But what was you said, well, we didn't like how they did things and we wanted to do it differently. Can you be more specific?
Sure.
What was it? Yeah.
A lot of things. Even when I first started, I come from, my dad was a school teacher, ran a janitorial business. I grew up working for him, cleaning office buildings. When I was too young to drive, I'd go with him on the weekends or going with them, after school. Then, when I got old enough, I had my own buildings. I'd go from football practice, basketball, lacrosse, right to clean an office building and come home. And, I get to graduate college and then moving to New York and saying, oh, okay, well, basically we're going to take an entire class of people and then basically we don't want to do business with them because they're not rich enough. That struck me as odd. It also kind of struck me as odd, the sheer volume of people that, quite frankly, in my opinion, had ethical bypasses at birth. I was involved in a lot of investment banking, during the whole, .com run up, and I'd be looking at prospectus, and I knew that this company was garbage, but it didn't matter. It didn't matter because it was sellable at the time. And it's just, think about Wall Street. They had that line in the movie, The Big Short, from Wall Street, we'll sell you anything if you're willing to buy it. And, that bothered me, and it didn't jive with my moral set, if you will. And I said, I don't want to do this anymore. So, and again, I'm lucky enough that I, worked with two of my brothers, and we said, what, let's go do our own thing.
In that process, you don't just work with big companies or rich people, and you've worked with a lot of small businesses. Is that right?
Yes. Yes. Do we have our clients that, that would, family office type clients that would be handled by like a Goldman Sachs? Yes. We have them. The most, and quite frankly, to be honest, handling those clients, it's different than handling people where you're trying to build wealth. The most rewarding part of what we do is building people's wealth and watching them go over the decades and watching them, start at one point and then get to that point when they become wealthy. That's one of the easiest gigs out there, in my opinion, quite frankly, is preserving wealth that's already created. It's the building part that's hard when you're teaching people to do the right thing. A lot of our job is to actually act as almost like a financial shrink, keeping people from doing stupid things with their money when markets go haywire. And, after being with us, people understand, oh, you were right. You know what? Stay calm. Don't worry. Yes. Okay. Everything's going to turn out all right. It's one of our rules of the road. You want to invest like you're already wealthy, like a multi-billionaire. They don't freak out when markets go haywire. They take advantage of the situation. It was one of JP Morgan's great quotes of all time. He said during, bear markets or recessions, stocks return to their rightful owners, meaning that me, okay, I'm going to take advantage of the situation. And unfortunately, too many people don't realize that. But that's probably, without a doubt, the most rewarding part of our business is watching people grow their business, watching them grow their wealth. I don't even like to call what we do. I don't like the phrase financial planning at all. To me, it's financial preparation. It's the same thing like if you're training. If you're training to, for a marathon, you're training to be a bodybuilder, you're training to be an athlete. You're working on the fundamentals all the time so that, whatever presents itself to you, whatever comes in front of you, God's going to give you certain opportunities throughout life. You're able to take advantage of those.
So this working with small businesses that you've done a lot of, have they actually taught you anything along the way about business?
Oh,
I'm just curious.
so many. I mean, again, not even just the businesses that people that are my clients, but the various different businesses that I worked at, small companies, startups, restaurants, paying my way through school and doing all of those things as well. I mean, that's what's great. I can think, unfortunately, a lot of young people are missing out on that nowadays, not doing all of the summer jobs and things that we used to do when we were younger. That's that's business bank. You bank all that knowledge that you have, and then you've got various different walks of life from people from different parts of the country, myriads of different businesses. You're trying to absorb all of that all the time. College is one thing, but entrepreneurs need to be in a perpetual state of educating themselves. And even I, right now, I said the young people that I bring in, I got my interns coming in this summer. I need a lot of help with some of the latest tech and various different things that are going on. Because again, sometimes it gets a little bit above my pay grade for my age, and I'm having a difficult time, keeping up. And they add to that. So yeah, you always want to be in a state where you're trying to learn from everyone.
In the years that you've had this company for 40 years, what's the biggest mistake maybe or threat that you had to deal with in all those years?
I mean, that's an interesting question. I get, right now, I guess to some degree I could, factor this in. Again, I've had a radio show that's on 250 stations around the country for, like I said, for 25 years. And over the past several years, I had to come to grips with the fact that I'm going to have to start doing vlogs and podcasts and other things to get out to people in a different way, and growing up that and beating the algorithms. That being, one of the things that was very, very difficult. It's difficult right now, but it's working out great. It's a challenge, and we're handling it and we're growing it. And it's I guess it's the one specific thing, and I guess when we started out too, I've come to think of it, when we started out too, and again, it depends on where you're from. We started, like I said, we moved back to Albany and trying to start our business back there at home, and thinking that, okay, these young guys are coming back and they're going to start their business in their hometown and everybody's going to be really receptive to it. That most certainly wasn't the case. I miscalculated there as well. It's kind of interesting. Sometimes it depends on where you live. Every it's a big country, different demographics anywhere. Albany's a capital of New York, and certain mindsets there, and the people there were kind of almost like kind of put off at the fact. Again, it was one of the things I didn't understand as a kid. It's like everybody wanted to graduate from high school and get a job for the state, and that wasn't us. And actually people were kind of like, put off by that. So again, I basically completely stopped marketing there altogether. It didn't make any sense.
Hi, the podcast you are listening to is a companion to my recent book, Tech Startup Toolkit: How to Launch Strong and Exit Big. This is the book I wish I'd had, as I was founding and running 8 startups over 35 years. I tell the unvarnished truth about what went right, and especially about what went wrong. You could get it from all the usual booksellers. I hope you like it. It's a true labor of love. Now back to the show.
What made you move to Florida?
Oh, I've been down. This is the second time I've been down in Florida. Well, right now it's all my kids are in college, and they again, my kids are all lacrosse kids. We moved back to Long Island about 9 years ago, and they were there for like their middle school and high school years, because that's the demographic for them. And plus, I wanted to give them a little bit of that Long Island, New York City moxie to some degree. I think it's healthy. And I'm back. I hate the cold. Love the weather down here. Plus, I also love the fact that there's no state taxes. It's just fantastic.
Okay, so one of the things you said early on in this conversation, and also when we talked before, is that you like to bridge between Washington and Wall Street. You're saying, what do you mean by that? And why is that such a big important thing?
Well, never in the history of my radio show, 25 years on air, have I ever given a buy, sell, or hold recommendation ever. That's not what we do. James Cramer can do that and lose people money till he's blue in the face. A buy for you is not a buy for your neighbor. I think, quite frankly, it's important for people to understand the underlying legislation, things that are happening in the country that are going to affect their pocketbooks, and how they need to prepare for it. maybe example, right now, okay, it's current events. Everyone's debating over this big, beautiful bill. And we find our country, 36, $37 trillion in debt. I've been banging on this drum for, since the end of the Clinton year. This is going back to 2000, the last time we had a, budget surplus here in this country. Printing money is inflationary, and don't pay attention to the government's numbers. It's nonsensical. We all know what we pay at the grocery store. We all know what we're paying for cars now. We all know what we're paying for insurance now and everyday items. And don't tell me that inflation's been under control for a period of time, because it hasn't. So you have to have a philosophy where, you're going to have to put your money to work. You're going to have to outgrow inflation based upon the fact that we don't have, either party in Washington, D.C. that actually wants to deal with the fact that, our budgets are out of control and we have to continue to print money to keep working. That's a killer. I mean, it's the biggest tax of them all. I mean, we're talking about, okay, we got to extend the 2017 tax cuts, which is fine. That's fantastic. That's all well and good. But guess what? One other tax, inflation's another tax. And until we start acting in a fiscally, sensible manner, that's going to continue to be the case. That's just an example of something, and how it's going to affect the country. Or, I've talked over the years, education and the need to improve, and all of these issues, societal issues, which I think are important to everyone, and how we tie them into, the business of finance and the direction of this country.
Couldn't agree more. And I worry about the deficit a lot. It needs to be addressed. I agree.
The Social Security, mid 1990s, I'm yelling and screaming at my Generation X. I said, listen, do not plan on getting Social Security. If you get it, congratulations. It's a bonus. Going to be cut by over 20% in just a few short years, and we don't hear crickets. We hear crickets about this. Last one that tried to reform it was Bush, and he didn't have the political capital because he was too busy fighting wars in Iraq, and we get nothing done. And I've seen it happen before. You took a look at the financial crisis that hit Europe in 2010 and the austerity that had to come into place. Everyone's government checks, because again, they kind of live off that over there, got cut significantly. It is a major hit. And they've been having to live under that austerity for that time. And obviously their situation is better and their economy has improved, but the people were hurt by that. And this is why I say, hey, listen, don't plan. If you get Social Security, fantastic, but plan on not getting it. That's a much more responsible way of handling things. And then if it gets cut, you're not going to care.
So this, your radio show it's got a, what is it called?
Watchdog on Wall Street.
Watchdog on Wall Street. Are you looking at like things that are dark secrets and telling people about them, or what are you doing there?
Well, originally, like I said, it started 25 years ago. I originally started, I was an hour program, and I was going after various different ripoffs and scams and things that were being pulled on people at the time. I mean, prior to having the show, I wrote a column entitled Understanding Enron. And this was in 1999. I was like, I didn't get it. And, this company was 5 years in a row, Fortune magazine's most innovative company, and everybody's touting the thing. And I'm like, this doesn't make any sense to me. You're trading bandwidth. I don't know how they're making money here, there. It didn't make much sense to me. Wrote an entire column on that, kind of got hammered, you don't know what you're talking about, because the stock went up for the next 10 months until it didn't. Eventually companies will trade for what they're worth. They have an intrinsic value, and obviously it didn't. And even during that period of time as well, I was, basically railing against, the dot-coms and where they were at, and making fun of me, Chicken Little, you don't understand. I did understand. I said, the lie that earnings, it's a new paradigm. Earnings don't matter anymore, and all the other nonsensical buzz phrases that were out at that time. Again, we had them not too long ago with the disruptor companies during COVID. Beyond Meat and Peloton, it's the same thing. It's the same racket. Okay. Getting people to do stupid things with their money. And I've been pretty good over the years at kind of identifying that. And that's, what the show was originally all about. And still, I do the ripoffs and scams, not as much. I mean, I used to really rail against a lot of brokerage firms and the way that they handle themselves. But, I almost had like an epiphany, kind of 2006, 2005, 2006. I'm saying, what? There has to be some personal responsibility involved with this. At some point in time, everybody's got to be an adult and understand that everything in life that has meaning, value, and worth involves work. time and effort, and people got to stop looking for shortcuts with their investments because that's a killer.
When I think about what you've already told us and deciding this was the way Wall Street was behaving was bad, it needed to be done differently. You got together with your brothers, you moved back to Albany to start it. Then you chose to move down to Florida. You've done this radio show, writings, and of course on the side you coach lacrosse, which is not a sport for the faint of heart. It's a tough sport. So all of this leads me to ask, okay, you've got a lot of grit, and so does anybody that starts a company from scratch and builds it up. Where, in your case, where does it come from? Where does your grit come from?
Again, we're all kind of wired differently, and it kind of goes to, I guess a lot has to do with my upbringing and how hard my dad worked, and my grandparents, half from Italy, half from Poland, and it's just kind of how we were brought up. I've always just every day I get up and I'm like, okay, how are we going to make the business better? How are we going to grow the business? It's like it's a fun challenge for me and my brothers and I every single day. And, I'm always trying to, find something new and how to go about growing it. Again, like I said, everyone's wired completely differently. And, it's kind of our process with financial preparation, because again, you want to have the ability to take advantage of whatever opportunities are going to be presented to you in life, and you kind of prey on it. And I'm saying, okay, God, what am I supposed to do? And I think that my, position is I think he wants me to go out and educate people and talk about all of these things and try to help people build wealth. And if you have that type of a mission, you believe that's something that you're supposed to be doing, I think that helps drive me as well.
So you're in a pretty good position to think about what are the conditions in the economy, in the market, that could be advantageous or disadvantageous to somebody that's thinking about building a new startup. And they may or may not need investor money. That some do, some don't. The one I'm running right now needed a lot of investor money because it was a hardware-based technology. People that are building SaaS application companies maybe don't need very much.
Yeah.
And if they could start off as a service, maybe they don't need any. So it's sort of a somewhat of a complex question, because the answer can't be the same for all the types of companies.
Yeah. And it's why, again, I've been yelling and screaming a lot over the past several months, because for the life of me, the whole, not a fan of this entire tariff system that has been put into play at all. This small business owners, you look out your window every single day and there's these things, called regulations. I call them it's like a minefield, and you want to know where the mines are. You don't want to step on a mine because this could wreck you and wreck your business. But when the minefield constantly changes all the time, it makes it that much more difficult. And that's what everybody's dealing with right now. You want to have a set of rules. You want, again, even with the tax cuts that they're putting in, why are you, basically making some of them go away over a certain period of time? If they're great tax cuts, keep them in place. Just let everybody know what the rules are. That's why, baseball's been around so long. I pretty much have the same rules. Okay, it'll change the pitch count or whatever, whatever. But for the most part, it's the same bloody ball game. 3 strikes and you're out. When the government is changing things all the time, you don't know what up is down is up. Who wants to invest in an environment like that? Was the phrase, the Yale professor, Schiller, animal spirits. As an entrepreneur, you want to have animal spirits. You want to hit the ground running. You don't want the government in your way and knocking on your door. With that being said, there's been some good things with the Chevron case this past year. The fact that the executive branch of government for decades now has continued to grab more and more power with all the acronym agencies that act as judge, jury, and executioner. That needs to go away as well. I want to get back to a point in time where, Congress is the one that's writing the rules and regulations like it was supposed to be. I'm dating myself, but I kind of learned that in Schoolhouse Rock and Saturday morning cartoons, back in the early 1970s. That's how things are not supposed to be done. They're not supposed to be dictated by these overlords from these agencies within the government. And that makes it difficult for small businesses. Small businesses are the engine of this country. Startups is what creates job growth. Took a look at the jobs numbers this past Friday. They were lousy. I don't care what everybody was telling you. The job growth, especially for small business, was lousy. Why do you think that is? They're uncertain.
The other thing that affects a small company is even if they're not going to get investor money right away, once they start to do well and need to scale and want to scale fast, they're not going to be able to do it necessarily organically. I mean, a great situation for a startup is to not need very much investor money at all. And then when they do need money, they're already cash flow positive, but they need to grow anyway. And now they're going to be able to get investors to invest on much, much better terms. But right now, and it's actually before Trump came in and did all this stuff, the VC, the investor market, had already gotten bad. That's a really worrisome thing. It was very good about 5 years ago, and maybe even 4 years ago, and then it started to freeze up. It was actually good. So I guess I could figure out the math here because COVID was 5 years ago. So right after COVID, it was raising money on pretty good terms was easy.
It's a liquidity right now for a lot of the VCs and a lot of the private equity companies, and they've changed their modus operandi a little bit to make them more attractive to look to be buying out companies that have already positive cash flow. The problem is the multiples that they're paying for these companies are obscene. I get calls every single day wanting to buy us at absolutely obscene valuations. And I'm like, there's no way. And I know what my margins are. I know how my business works. I'm like, how in the world are you going to make money, paying me this valuation on this company unless one of two things, okay? You're going to either really wreck my clients and do some horrible things to them, which is not, I couldn't live with myself with something like that. Or you're going to be playing a, demonic game of musical chairs, trying to find some sucker, to buy this at a ridiculous, even a higher valuation that is more ridiculous. I mean, I've seen HVAC companies here in Florida get bought out at $35, $40 million. Obscene multiples. Why? Because they have positive cash flow and it helps them make their books look a little bit better. A lot of these, you're going to see there's going to be a reckoning when it comes to the whole VC private equity market. Again, I would never have to go on vacation in my entire life. These guys beg me to put my clients into their various different things, fly here, there, and everywhere. I'm like, no, first and foremost, I would never sell my company, never in a million years. There's no way. I'm a fiduciary. That's not going to happen. But I'm also not going to buy your junk and put it in my clients' portfolios because the way that they price these things, all these so-called Ivy League geniuses, not very good. And, this thing started going downhill about 2005 when you started seeing like the way that they acted almost like parasites on certain companies and sucking them dry. Now it's a little bit different, but basically the same game.
This has been very interesting. Do you have any last words of wisdom for potential startup founders?
I guess the best one I heard this a long time ago. You want to make God laugh, tell him your plans. Be able to adjust. You may go into something, like I said, when we start our company, I got this great idea. We're going back up to Albany and we're going to be welcomed with open arms. We all played sports there and all this different thing. No, but I have to adjust. You got to be willing to adjust to the terrain. It's that old saying, but Navy SEAL, told me, you go into battle and you have your plan and your map, and then you get there and guess what? The map's wrong. So what do? You go with the map or you go with the terrain? You go with the terrain and you adjust.
That's good advice. There are lots of different sayings that say the same thing, but startup founders need to be prepared to pivot a lot. When I started out, which was in 1988, first startup was back then. We didn't call it pivoting. We called it bobbing and weaving, which I think is a better description.
It was a boxing. More people watch boxing back then. That's why it probably was bobbing and weaving. Not many people watch boxing anymore. It's more MMA. The pivot, probably went to basketball, I assume, the pivot move.
Pivot move, right? Chris, thanks very much for doing this. We've created a nice episode here. Inform people about something that they might not know anything about, which is great.
Pleasure. Thank you so much for having me. It was a lot of fun.
Now, for what I call the Startup Founder Toolkit. Tool number 1, the terrain over map principle. Your business plan is just a map, but the market is the terrain. When they don't match, and they never will completely, always go with what the terrain is telling you. Chris learned this the hard way when he assumed his hometown would welcome his new business with open arms. Smart founders stay flexible and adjust to reality, not their assumptions. Tool number 2, the personal responsibility filter. Before you blame the economy, regulations, or market conditions for your struggles, ask yourself, what can I control here? Chris realized that while he couldn't change how Wall Street operated, he could build something different. Focus your energy on what you can influence, not what you can complain about. And tool number 3, the long game mindset. In a world of quick flips and exit strategies, the real money and satisfaction comes from building something that compounds over decades. Chris has been growing the same business for 40 years because he focused on creating genuine value, not chasing the latest trend. Think marathon, not sprint. That's our episode with Chris. Until next time, keep designing your success. The show notes contain useful resources and links. Please follow and rate us at podchaser.com/designing successful startups. Also, please share and like us on your social media channel. This is Jothy Rosenberg saying, ta-ta for now, TTFN.